So now let's talk about preliminary engagement activities. There are three main preliminary engagement activities. First is figuring out your engagement team requirements. Second is making sure both the audit team and firm are in compliance with the ethical requirements and the independence requirements. And then third will be establishing an understanding with the entity. In some earlier versions of the slides, this said of, and I want to be clear, it is with. All right, so let's talk a little bit more about engagement team requirements. So most of these are pretty straightforward. They're just things that you have to take into consideration. So we have things like engagement size and complexity. All right, so if an engagement seems large and really complex, you're going to need more staff availability, right? Because you need the people there to handle it. If it's a very risky audit, you might want to have more staff, more experienced people on it, and make sure you don't have just a team of newbies. You want to think about need for special expertise. So do we need the industry expertise? Are there significant estimates at this client where we want to get our valuation people involved? Also think about personnel availability, which is related to the timing of the work to be performed. So I'm sure all of you have heard about how there's busy season from January through March at most of these big audit firms. That's busy season happens because most firms' fiscal year ends are 12/31. So if I'm taking on a new client and they're very large and they have a 12/31 year end, then I know I'm going to need staff during busy season when there's the least availability of staff. So that's going to be much harder to make sure it's staffed adequately. Versus if you have a big new client with an August 31st fiscal year end, then I know that my most critical time to be staffed, the busy season for that engagement, will be September, October, possibly falling into November. And that's a relatively low-key time for most audit firms. So there should easily be staff availability during those months. Also consider how geographically dispersed the client is and if you need suborder work. So what is suborder work? That's basically if my main audit is in Atlanta, but my client has a big subsidiary in the UK, then I need to get in touch with my EY UK people and say, hey, can you devote 50 hours towards auditing, looking at this subsidiary? Because otherwise the alternative is I need to get my Atlanta team and fly them out to UK for a couple of weeks to do this work. So that all is organized up front, so we don't have any surprises. We know that we have full availability to take on this audit. We also need to make sure both the firm and the team, engagement team, are independent. Now, you really should determine if the firm is independent up front before you do the acceptance continuance. That really should be part of acceptance continuance, because you should never accept a client where you're not independent, because we know we aren't able to issue opinions on those clients, right? You just have to issue the disclaimer opinion. You also want to make sure all the individual members of your audit team are in compliance. So you want to make sure you don't have a staff member that purchased a few shares in Coca-Cola, then they shouldn't be on their Coca-Cola engagement team. If there are unpaid fees from last year, then that does constitute an independence problem. So you just need to make sure your client is fully paid up in order to be able to audit them for the next fiscal year. And another good thing is to always monitor consulting services provided by affiliates. So if you have that UK subsidiary and you find out that EY UK has been providing them bookkeeping services, if it's a public company, then that means your audit team is not technically independent. So that would be a huge issue, right? Because then you get into this whole issue with auditing your own work. Now let's talk about establishing an understanding with the client or entity. So there's three topics within this. One, you need to figure out your engagement letter. Two, you need to figure out the work of internal auditors and the audit committee's role in the organization. So the first big one here is the engagement letter. This is basically a contract between the auditor and the client, stating what services the auditor will provide, what the fees the auditor will receive will be. And here we have a slide that goes more into depth on the various components of the engagement letter. So it'll be addressed to the audit committee for public companies or management for private companies. It'll describe all the auditor's services that they're agreeing to provide. It'll discuss the auditor's responsibilities versus management's, right? Management needs to prepare the financial statements. The auditors will audit them. It'll also explain limitations like, hey, we're going to be providing reasonable assurance, not absolute assurance. We're going to be making sure you have no material misstatements, not that you don't have any misstatements. Like we said, it also talks about management's responsibilities, and it'll talk about how the client is allowed to use the audit opinion. So are they allowed to include it with their 10K filing? If they're a private company, it'll talk about any particular parties that it can be shared with, such as debt holders. It'll also establish a timeline for the audit and talk about what fees they'll be paid. So it'll include things like, we are planning to be out the first 2 weeks of June to test controls. We will plan to come out in December to test the 9/30 balance sheet and January to test the 12/31 balance sheet, things like that. The engagement letter will be signed off by audit partner and audit committee chair, or if it's a private company, senior management. And these are some other items that can be included if we want to work with specialists or use the work of internal audit. That type of stuff will be outlined in the letter. Now let's talk about if we want to use the work of internal audit. So sometimes auditors rely on internal audit's work, and it's able to cut down on a lot of the procedures they perform and on some of their hours, and therefore it'll cut down on fees. However, sometimes the internal audit function just is lacking in some way, and the auditor wouldn't want to rely upon them. So there's 3 things we look at to see if we should rely on the work of internal audit. 1, are they objective? 2, are they competent? 3, do they follow a systematic and disciplined approach? And I want to be clear that the internal auditor's work would never replace the work of the auditor. However, what would happen is we would take the work of internal audit and kind of integrate it into our work papers and say, here's what internal audit did, here's the conclusions they came up with. Now here is how we feel about their conclusions. Do we think they got it right? Do we think they got it wrong? So it's more of a integration and building off of what they did. What they did is our baseline versus having their work replace ours entirely. And if you try to look at the auditor's work papers, all you see is internal audit. That would not be what you would expect to see. Okay, so let's talk about how we determine if they're objective, competent, and follow a systematic and disciplined approach. So objectivity, again, is about whether they're mentally objective, whether they're able to be kind of independent of senior management. So conflicting responsibilities is a big thing to consider here. We said you don't want to have a member of your internal audit group who is beholden to management. So you wouldn't want them to also be working as the controller in the controller's role, being supervised by the CFO, working to put together the financial statements. And then for 4 weeks out of the year, they work in the internal audit department, right? That wouldn't work. There are clear conflicts there because in one role, you're reporting to management and working for them. In the other role, we're really supposed to be kind of helping to supervise management and report on management's activities to the audit committee. So again, it's important that the audit committee is overseeing the hiring and firing of the internal audit department rather than management. It also might help to know if the person doing the internal auditing is a CPA or a member of the AICPA, because then technically they should be following the AICPA's code of conduct, which kind of has some built-in mechanisms for making sure they're objective and independent in their work. Okay, so how do we evaluate competence? So competence is really their ability to do the job. It's about their education and their training. So here we're looking to make sure what type of people are internal audit hiring and what is their background? Do they have that training? Do they have the necessary knowledge? One part of it is they need to understand the company, understand how the operations work, understand what all the systems are. So they need that internal knowledge, but they also need the skills of someone who has training in internal auditing or auditing to be able to assess if all those things internal to the company are working the way that they should. And in terms of evaluating if internal audit is following a systematic and disciplined approach, the main thing here is looking at their work program, seeing do they have a plan in place? Do they have a schedule mapped out for when they're visiting all the warehouses? Do they have lists of procedures that they've performed? So a lot of this is about a paper trail, which of course doesn't necessarily have to be hard copy paper. It can be an electronic trail of all the procedures they've performed and all the work that they've done. And really quickly, I want to just touch on what type of work you would want the internal auditor to do. So typically, if we rely on the work of internal audit, it's for things like testing controls. It's not for things like testing balance sheet balances to make sure they're correct, right? We'll get them to test controls, see if all the systems are kind of operating as they should in terms of processing data, compiling data, and capturing transactions. Another thing we'll have them do sometimes is inventory observations. So we as the core audit team made to go around the country and do 5 inventory observations at different warehouses. And we might also use the work of internal audit. If internal audit looked at 10 or 15 different locations, we might pull in some of their work papers as additional support for ours.